Monday's vaccine-induced euphoria has been overcome by surging virus cases in the US, Europe and now Japan. So the local market finished slightly lower today, but for the week, we saw a nice 3.3% gain. And those virus fears also weighed on the Australian dollar today. CBA updated its economic forecasts and they're pretty rosy and don't even factor in a vaccine. The biggest bank in the land now expects a much stronger economy next year with growth of 4.2%, almost double its previous forecast. It also expects the jobless rate to be below 6%, much lower than the RBA. Its reasoning? Consumer confidence is now at a 7-year high. And why wouldn't it be? Look how much cash we've stashed this year. CBA expects us to start using this and spend the economy into recovery. Another reason for optimism is that housing just hasn't been hit that hard. And the bank's lending data shows we're about to dump money into construction, a big employer and stimulator. And housing prices are now rising in most cities. The bounce in the economy should mean a bounce in bank earnings. We've just wrapped bank reporting season and earnings weren't pretty. But for shareholders of the Big Four, things shouldn't get any worse from here. And after a solid week for value stocks, a bit of a sell-off today. Energy firms in particular have had their best week in quite some time on hopes a vaccine will have us fueling up the jets again. But despite the likes of Oil Search rising 30% this week, as this chart shows, it's a long way to the top if you want to back oil. And that's finance.